You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At Public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch to Public.com, the only options trading platform where you can earn rebates on every single contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back once again for a very special episode of Blossom, aka the Option Block out here. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks have been binging of late. Hope you rested up over the weekend because we got ourselves a banger to kick things off here, listeners. You know, I go away for a couple of days. I go east. By the way, if I sound a little bit different, listeners, it's because I'm coming to you not from our Chicago studio, but the Eastern studio this week, actually the Hall of Fame studio. I'm actually in a massive boardroom right across the street pretty much from the Football Hall of Fame. That's where I was yesterday. So I'm in a pretty cool setup here, but if it sounds a little bit different, that's why I sound a little different, listeners. Taking over the boardrooms here just to get you your episode of the show because, it's a bit of a banger out here this week. You know the deal, theoptionsinsider.com/pro to get the pro and leave the ratings and reviews, all that fun. We're going to dispense with the pleasantries, get the folks on. We're even going to dispense with the usual trivia fun this week because we got some stuff to get to. I'm joined on the Monday episode this week by the uncleest of Mikes, a.k.a. Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, you know, I leave you in charge for a couple of days of this market, and what'd you do to me, sir? You crushed it. And, of course, for a dose of cynicism, we have the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to you as well, sir. All right, then. With the team assembled, we will dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And, of course, if you're listening live, listeners, we're kind of doing it old school, the old school way today. So the music, all that fun, all the transition is going to be cut in later. We didn't have time to set all that up, and we wanted to make sure we got you folks your show right on the screws this week because it's a banger. Of course, as we went off the air on Friday, there were a lot of concerns, a lot of consternation out there. Of course, we saw that those jobs numbers coming in a little bit weaker than expected, maybe a lot weaker. And maybe for the first time in quite some time, bad news appeared to be bad news for the economy. And again, we said it on the Friday show. A lot of this all has to be taken in context. There was a lot of other concern heading into Friday. The R word was trending on Twitter for a couple of days heading into that. So we had a lot of other underlying fears that were circulating in the market. So when that jobs number hit, it was kind of like a perfect storm. It really sent the markets into a tailspin. We were talking then about VIX almost hitting a 30, 29 and change. It seemed like it was a bit of a sell-off. The rout had begun. Then, of course, by the second half of the session, as we have seen a lot lately, the worm had turned. Markets came in. Vol came in quite a bit. VIX cash ended up closing in the 23.5 range. In fact, that is our question of the week again. This week, we did it. We had a lot of people had fun last week, so we thought we'd ask you again this week, coming down on Friday, because it's a banger on the weekend. We'll get to that. But we said yesterday the futures were looking nasty again after all that sell-off talk. Then, of course, Japan sparks the rout again, off 10+% in the Nikkei, and it just seemed like it was going to follow suit. The ripple was going to carry through into the markets here in the U.S. So we asked you on Sunday, as the futures were opening and looking kind of dark, we said, hey, where do you think VIX is going to open on Monday? We closed at 23.39, so just below 23.5. I gave you a few ranges around where it did last time, right around where it opened, 23 to 24, or right around where it closed, I should say. A little bit higher, 24 to 26. Even higher, we didn't obviously have enough headroom in ours, north of 26, and then lower, below 23. Interestingly enough, 6% of you chose lower, 6.2%, but over half, 52.3% of you chose what ended up being the right choice, north of 26. 32.3% said higher, 24 to 26, and around here, 23 to 24, 9.2%. And yeah, spoiler alert, coming into today, we undersold the vol move out there, listeners. The S&P was selling off quite a bit. We opened aggressively low, down around the 51.35 range, somewhere in that level. As Uncle Mike has alluded to, we have been rallying ever since then. So if you want to be a bit of a glass half full guy, you can certainly cling to that. As we're kicking off the show here, S&P off about 2.7%, about only 143 handles, 143 handles between friends, listeners. NASDAQ off over 3%, over 500 handles. And the Dow off about 2.33%. Closing in on 1,000 handles, was off over 1,000 handles at one point out there. And of course, our old friends, the small caps, doing their own thing, off 3.25% right now. But again, they have been rallying all day. But VIX, though, VIX has been another beast. You know, VIX cash, as it tends to do, it performs in days like this and moments like this. And in fact, what a weekend to have a Russell super secret weekend UVIX trade on. I know I didn't put it on because I was traveling this weekend, so I didn't want to manage it. I know talking to him on Vol Views, he also said that he was going to scale it back because we had done it all recently for decent size and gotten burned. So he was doing it, I believe, but scaling it back. And unfortunately, this is probably the best week in a long time that that product, or I should say that trade, has performed out there. Yeah, so VIX cash skyrocketing. I believe we got intraday. I think we got into the 65 handle at one point. So just I think the technical term for that is bonkers. Listen, I haven't seen a 60 handle or even a 50 handle in VIX in quite some time. What was that, a 38 right before showtime? That would have put it up about 20 points from where we were on the Thursday show. As we kicked off the show, it had come back down, back down in quotes, to a 33. That still puts us up 15 points from where we were last week. So yeah, just crazy territory. VVIX at this point is almost just a meaningless number at this point. 182 is where we were right before showtime. That puts us up, only 74 points from where we were on the Thursday show, listeners. So a lot to unpack. People are saying this is it. This is the route. This is the end of times. So, when those things are hitting the tape, we have to hit the airwaves, listeners. Let's go around the horn, dispense with a trivia this week. Let's go with Uncle Mike because he's our resident ray of sunshine out here today. And Pokes could probably use a dose of optimism. Mr. Uncle Mike, sir, what was catching your eye as we started to see the sell-off unpack this weekend? We saw the Nikkei taking it on the chin. We saw the futures in the U.S. open pretty aggressively red. And then, as you pointed out, we have been rallying since. What's been lighting up your tape out there, sir?
I think the big thing that lights up my tape, and it's a down day if I'm leading with this lighting up my tape, is the VIX. The fact that we had the sell-off with which we had overnight, and the fact that we had the open that we had on VIX pre-market or before the cash trading opened at 7:30 in the morning Chicago time, roughly, the VIX got over 60, 65. And at the open of cash, the VIX was in the mid 50s. And so I guess if you want to also look at a bit of optimism, since in the course of the last 4.5 hours, the VIX has been cut in half. We're just rallying that much. But in terms of looking at the overall picture, this is something to where we haven't had one of these in a while. And it's a situation to where whenever we have a sell-off like this, no one ever predicts it. I shouldn't say nobody, but it's not something that you ever expect to see coming. It just kind of happens. And what concerns me, and yes, I said concerns, not makes me feel optimistic, is the fact that it has given us such a V in that we went down like we did. 7:30 a.m. was the low. We're not channeling at that level. I'm just showing just the pre-market SPY, for example, got down to 507.83. And we're already back to almost the 520 level. We were up at, I'm just looking at the highs, 523 about a little over a half hour ago. And so we just hit those levels and then buyers come in. And so that still makes for a volatile market, meaning that we could go right back down that quickly. And so with everything that's going on right now in the fast sell-off that we had, or the overnight sell-off that we have, and then buyers coming in, we still have a lot more volatility to go, whether it's to the right side or the wrong side in terms of being bullish or bearish. I still see a lot more movement coming in the near future. With that being said, what do you do in times like this? Well, first off, in terms of the 60-40 portfolio, if you have 60% in stocks and 40% in bonds, the bonds aren't helping you worth a hoot today. Right now, the 10 years roughly flat on the day. Corporate bonds are actually slightly down today. And then longer term, just if you look at TLT, that's up like 1/3%. So if you are doing a 60-40 because you want to have diversification and income from the bonds, hey, God bless you. I think it's a wonderful thing. I have clients doing that myself for those reasons, because we have the income component of the bonds. However, or at various percentages. However, if you're counting on bonds to increase as a flight to safety when stocks go down, today's an amazing example of how that's not always going to be the case. And so if you're looking for a correlated asset, buy puts. That's what's going to be a correlated asset in terms of if you're looking for, a non-correlated asset, if you're looking for some type of real diversification. Puts versus S&P, that's going to be about as diversified as you can get because they go in the opposite direction. So once again, I'm not trying to diss bonds by any means. I have a lot of people in them for various reasons, but I don't have any of them in there as a means of trying to gain when the market drops as a non-correlated asset. Everything's going down today. We have silver, I shouldn't say everything, but precious metals, we have silver down almost 5% on the day. The S&P itself was down nearly 5% at one point. Right now it's down roughly 2.5%. So we have rallied a lot off the lows. What do you do in a time like this? Well, this is what I did at the beginning of the market today. For the buy and hold stocks with which we have, I did nothing. And I'm going to do nothing because buy and hold means buy and hold. For the hedge stocks that we have, the only thing that I did to try to take advantage of the higher VIX, as well as the drop in the marketplace, was to sell some puts. And this is my view on that. There's two ways with which you can hedge. You can be a passive hedger or an active hedger. A passive hedger, you put in a hedge, you sit on it, and then at expiration, you either make money or you lose money, whatever the case may be. If you're an active hedger, you do stuff in terms of, okay, yes, I'm hedged XYZ stock right now, but we have a VIX that's at 55 at the open of the market today. And if I do nothing and the stock stays the same, I believe that volatility is going to go down, let's say, and I'm going to miss out on this higher volatility. If that's where you are, not only trying to take advantage of a drop in the market, but to take advantage of a VIX that was at 65 today, if that's what you're willing to do, this is what I did. Now, and this is just one example that I'm just going to go through right now. We're long Microsoft, not we, but I have one client that's long Microsoft, and he's hedging it just because if he were to sell it, his capital gains tax would be through the roof because he has such a low basis on it. So we're buying puts on it. We're currently going into today. We were in the 415 put on Microsoft. And so I think we talked about this a little bit last week after the earnings. I was expecting to do something with this when Microsoft went down to 389 after market, but then it opened right back up to where it was. So I never did anything with it. Not right back to where it was, but pretty close. Today, this is what I did. I had an opportunity to finance a vast majority of the cost of the put option itself. And what I did is I actually sold the 350 put against the 415 put. So now, instead of being hedged all the way to zero, the client's going to give up downside from 350 to zero. And I'm okay with that because what that's going to do is this is a stock that he's more than happy to hold for the long term. But let's say that volatility goes down, which it did, then the value of this put that I sold is going to go down. Now, if Microsoft goes down to 325, 320, et cetera, whatever, that is the risk. That is the trade out with which we make. However, when we have that high of volatility, that's one way with which I'm willing to sell it and take that chance that we're going to either stabilize kind of sort of, or so long as Microsoft doesn't go down an additional, because Microsoft was at roughly 390 when I did this, so long as Microsoft doesn't go down an additional over 10%, then we're going to have a trade to where we're okay with it. And if it does, Microsoft's a very good company. We're fine owning it past the 350 level and holding on to it. And if that's the case, then the hedge only benefited us 20% of the stock if it were to go below 350. So in terms of where we are with things and how you can take advantage of shorter term things in a longer term market, when you have a VIX that I believed was overbought this morning, that is how I wanted to do it. Now, is my risk managed the way with which I want it to be? Yes. If I'm wrong, am I comfortable taking on that risk? Absolutely 100%. So when doing so, understand that if you're looking for a non-correlated asset to the stocks, a put on the stocks is going to be the most non-correlated asset you can possibly get. With that, there's no guarantees that bonds are going to go up when stocks go down because it is not happening today. Also, what are you willing to do with your buy and hold stocks? Are you holding them? I am. I'm looking at a lot of these stocks today. Thank God I didn't panic at the beginning of the market today. I'm just looking at these, and a lot of them are getting closer to even on the day when some of them were down over 10%. So in the buy and hold section of the portfolio, buy and hold means buy and hold. And then the final thing, if you are hedging and you feel that you can take advantage of something to where even if it goes against you, you're still not going to be in a bad spot. That's the thing with which you can do in a market like this. And that's the update from most likely the most boring old lady granny trader on this whole show. That's what I saw today, and that's what I did.
Do me a favor, really quickly. At the start, we heard 99% of what you said, I believe. And I do believe we may have lost like the first setup. At least I did here in the Hall of Fame studio. So just give us really quickly the Microsoft, the strikes, and everything you're doing to set it up. Then they heard the rest.
Okay, got it. So with what we did, this is just one example of something we did. This is one client, one example. I'm just using this for purpose of teaching, not recommending it by any means, but we're long Microsoft. Client owns Microsoft at a very low basis. And so what we're doing is we're just buying puts against Microsoft in case we have a day like this because the positions become kind of oversized. And so we were long the 415 put on Microsoft. And then as the market opened this morning with the high VIX, what I ended up deciding to do was sell the 350 put against the 415 put. So now we've taken away any protection below the 350 level, but we financed most of the cost of the protection for this month. Is that good?
There you go. Perfect, sir. All right, good stuff. I want to make sure everyone got every dollop of Uncle Mike wisdom on a day like today. Let's turn now to the Southern volatility mecca, where spoiler alert, you're getting a little bit of volatility today, Mr. Meatball. Walk us through the same scenario. Obviously, we went home on Friday. Markets closed. It seemed like the story we've seen play out a few times was playing out again. We had sold off aggressively, but it seemed like the worm was turning a little bit. Then, of course, the 1-2 punch of Tokyo this weekend, and then our futures open off lower, and then, of course, what we've seen today. So walk us through all of that, sir, as it unfolded for you.
Yeah, I mean the market was tipping its hand for the last 2 weeks. This actually started, actually when we were in our conference in July. It's interesting that kind of convexity and hedging was the theme of our conference, right, Mark? But
we were talking for a while that it was cheap to buy a put. So if you wanted to do so, perhaps get on that train.
We were talking about how inexpensive it was to hedge. And really, like the 24th was when this started, where we started to see the VIX kind of slowly rise. Thursday was our first big sell-off, no reaction from the VIX. Friday, sell-off, VIX actually reacts. And even though the market turned around, the VIX never did. VIX futures stayed very firm. The VIX pulled back, but the VIX futures stayed very firm, stayed in backwardation, and now we get the big follow through today. And if you know backwardation, and if you know how we're set, this probably, we might get a face ripper tomorrow, Tuesday. You never know, but if you know how these things work, it's going to take us a little while to work out of it. This is not I don't believe this is the generational buying opportunity right now. There's clearly something broken within the market because, we got to 5150 and the VIX is 65. There was certainly somebody was way over leveraged today because that VIX move was out of bounds relative to how much the market was moving. At our lows, we were down 4%. That's not a 65 VIX. Never even really threatened a circuit breaker. So there's something underneath brewing that is problematic for the market as a whole. So I think we may have topped out from a volatility perspective, but I think we may see some further market bottoming.
It's funny you mentioned that because, like I said, I'm traveling now. I'm here in the Hall of Fame studio this week, and the first thing I saw when I fired up my screens after I looked at the overnight last night, of course, coming into today, was the VIX, and I thought, oh, we must be at a circuit breaker or something if VIX is that high. And then I looked at the actual market, and I was like, oh no, we are not touching circuit breaker. So you're right. I kind of noticed that bit of a disconnect as well. So it is quite possible, listeners, that someone got caught maybe on the wrong foot of this market. And I know, Mr. Meatball, you've been playing around with different trades out there. We've been talking about the weekend UVIX trade. We've been talking about all sorts of other fun things, garbage VIX calls and things on the network for a while, both of which actually worked out fairly well. A lot of our listeners writing in saying they had good weekends this weekend, which is good to see. But anything you've been playing around with in the vol space with all this madness going on, sir?
Well, I'd been buying some cheapy puts the last couple days, not doing that today, but I had on Friday afternoon when I saw the market was still, that the futures term structure was still backward. You'll like this. I picked up some XSP 500 puts for Friday for 35 cents. They were $7 on the open. The 500 puts, the 5,000 puts for August 6th that I bought for a little over $5. Sold those at 46. So this was one of those moments where convexity, where volatility actually really outperformed the overall movement in the market because fear took over, and I'm interested to see if there's any more taps on the shoulder from clearing firms, and we start seeing another group of people get liquidated here in the next day or two.
Does have the width of liquidations about it, does it not? It has that that air with so many people playing fast and loose. This is also really, the most aggressive sell-off and downturn we've seen in this new modern zero DTE era, right? So it's only been a little over 2 years that we've had this zero DTE madness afoot and gripping the market. We've been joking about gamma bombs out there. If they were such, we would see them kicking in moments like this. So certainly intriguing out there, listeners, as we keep on rolling. Let's see what is intriguing out there in these markets right now, listeners. Are they putting up intriguing numbers? Sometimes with these routes, when people just get terrified, they take the ball and go home. Also, we are recording now early August, not exactly a boom time for the market. A lot of people like myself traveling a little bit right now. Market's a little bit thin. People are in the Hamptons, or maybe they're in the Hall of Fame studio here with me today. But either way, usually market's a little bit thinner heading into the August month. So let's see what's lighting it up out there. VIX putting up some numbers today, listeners, as you would expect. But maybe not the explosive numbers you would expect as well. Again, given the VIX kissing 65 out there today, and the VIX cash, just the insanity we saw out there from an overall just level perspective. You might be forgiven for expecting, okay, here we go, Volmageddon 2.0, 2+ million contracts on the tape. No problem out here in VIX land. Not the case. It's impressive volume, 1.1 million. Whenever VIX hits a million handle, it's nothing to sneeze at. But 1.1 million, you might be forgiven for expecting, like I said, a lot more. The ADV is threatening a million again, 972. We don't typically see that in August, so that's usually a sign that the game is afoot. If the VIX kissing 65, if VVIX at 180, that didn't give you the signal that the game was afoot out there. VIX threatening a million contracts a day probably should do it. If you're wondering what's lighting it up out there today, it looks like it's 71,000 of the SEP 14 puts. So we got some 14 puts. Interesting. We got some action. We also have the AUG 40s. That's more of what I expected out there today. 49,000 of those bad boys. Let's see. Where do those AUG 40s print for today, listeners? AUG 40s, $3. Well, that's the SEP 40s. Those are the SEP 40s. Went up for $3.17. AUG 40s, 360 as well. Looks like they went up as part of a spread. Wasn't against the SEP, though. It was against something else, and I don't see the second leg here. And listeners, I'll have to scroll for days, so we'll have to leave it as a mystery for what the second leg. Oh, the AUG 30s. Looks like it was AUG 30, AUG 40 vertical. Like they might have been taking it off. So either way, AUG 40 is coming in at number 2 out there today, and SEP 14 puts. Do you have those on your bingo card? SPY, if you just threw up SPY right now and said, what's going on in SPY, and you had no other context for what was going on in the broad market, you might be forgiven for thinking, it's a bit of an active day, but it's not the route you've been hearing about, recession trending on Twitter, Black Monday, all these things trending on Twitter. You would not think that looking at the SPY number today. Shy of 5 million, 4.91 million. Again, normal day like today, we'd expect 4.33 million. So you're talking not even a million contracts more than we typically have in SPY right now. So again, there's a lot of disconnects in this market between, we're getting different signals all over the place. That's kind of the Meatball was alluding to. Maybe there's more afoot to this. Maybe there's some drama behind the scenes that someone having to be unwound at some dire levels. The S looking a little bit more active. The S, you look at this and think, okay, the game is definitely afoot now with the S. Closing in on 3 million contracts right now. We usually expect around 2 million, 1.75 this time of day. So 3 million is respectable. The ADV is 3.25, so we're obviously already pretty much there right now. Small caps, IWM, 1.4 million contracts on the tape right now. The ADV about 2.25. So small caps doing, again, impressive volume out there as well. And the Qs, this is high volume for them, but this is not light the world on fire. The sky is falling volume. 2.66 million. If you've been listening to the show for a while, the queues around this time, usually somewhere around 2.25 million. So you're talking not even 500,000 more contracts there. So yeah, it's weird pickings out there today, listeners. The ADV 4.11 million, probably going to hit that today out there in the queues. But yeah, it's a weird one. And these are usually the days sometimes where there's so much macro madness afoot, listeners, that people don't have time for playing in the single names. They take their ball and go home. So sometimes volume's actually light out here in the single names. Let's see what we have on our table out here today, listeners. And it cost you 282,000 contracts to break into the top 10 today. That's respectable. That's not 360, 380, but it's not 160 either. That gets us to, again, weird names hitting our top 10 today as well. Patterson UTI Energy, ticker symbol PTEN. You know PTEN, maybe you love them. We've talked about them on the odd block in the past and on options oddities. They're trading 908 right now, off about 60 cents, about 6.15% today. They've had a range of 894 on the dark side and about 9.25 on the upside. So not a bonkers day for them out there today either, which is kind of interesting. And yeah, putting up 282,000 contracts on the tape out there today. Interesting. They say they're off 61 cents, but their high is 9.25. I'm not sure what's going on with my data here today. Listen, maybe it's something to do with the Hall of Fame studio. Either way, though, P10, number 10, 282,000 contracts. Again, weird names here. Number 9, we got our old friend New Holdings out here, freshly downgraded by UBS, and 1090 off about a dime today. They've had a range of 1096 on the high side, 967 on the low side. So about $1.30. That's a decent range for a sub $11 stock. Putting up 290,000 contracts for today, number 9 spot for NU. I haven't talked about NU, New Holdings, in a while. But there they are, number 9. Number 8, a frequent offender. It's Palantir, 317. 24, pretty much even, off about 70 cents. They came for them earlier this morning as well, 21.25, and the high was 24.42. So they're close to their highs now for the day here. They opened at 21.75. So again, kind of getting back to the Uncle Mike point that things have mostly been rallying. If you look at, just today's activity, forget about where we closed on Friday or over the weekend. Look at today's activity. You think the bulls are on the rampage. Again, 24.14 right now for Palantir. Number 8, 317,000. Number 7, we've got our pals out there, SoFi. Just visited SoFi Stadium just a few weeks ago out there. 668 for SoFi. Actually up now, up about 3 cents. So they've rallied. They opened at 603, and that was pretty much their low for the day. They got up to 6.75, which is pretty much where they are right now. So they've been pretty much in rally ho mode all day. Good for number 7, 394,000 contracts. Number 6, my old stomping grounds out here, listeners. It's the old INTC, trading pretty much $20 even right now. Still off about almost $1.50 or nearly 7%, about 6 2/3%. Looks like their low is about 19.25, and they're close to their highs. Their highs were 20.38. So an interesting day out here for Intel. Out here, interesting, yeah. So low 19.25. Yeah, my data's all funky here today, listeners, but the range should be accurate, which is a high of 20.38 and a low of 19.29. Either way, number 6, Intel, listeners, 431,000 contracts on the tape. Number 5, we got the chip zone and the A tech names coming, so strap in. It's AMD, number 5, 136.16, up about 2.75% now today. So they've been on the rally ho mode. They opened at about 122.16. My goodness. And they got as low as 121.82. They got up to 139 and change as well. So they're off their highs. But again, they've had a nice run from their lows of 121 and change. Good for number 5, 448,000 contracts. Number 4, keeping it in the A names, it's Amazon, 160.75. Let's see. They opened at 151.61. 154.25, excuse me. They got as low as 151.61. And their high was about 163, trading 160.91 right now. Good for 542,000 contracts. And the number 4 spot, we're just going to hang out with the ranges today, listeners. As we go to number 3, it's Tesla. Yeah, number 3 is Tesla. That's kind of interesting. So a little bit of a shuffle at the top today, listeners. Tesla closing in on 1 million contracts. Not even 1 million contracts on the tape for Tesla. Usually expect them to be about 1.3 million this time of day. Tesla 201.10 right now. They opened at 185.25. Yeah, when I checked them earlier this morning, they were well south of 200. So back up to 200 now. Their high was 203.88, so not that far away from that, about $3 away from that. And the low was 182 even. So they've rallied nearly 20 handles from their low on the day here, listeners. So yeah, just a crazy, crazy day out there today. Number 2, it's the fruit company. So fighting their way into the number 2 spot. I haven't seen that in a while. It's Apple, 1.07 million. They opened at 199 even. So yeah, interesting stuff there. Their low was 196 even. So still 20 handles away from where they were roughly when they announced that massive buyback, even at that low level. And then they have since rallied back up. They got up to 213.5, trading 211 and about a third right now. 1.07 million for the number 2 spot for Apple. And then number 1, we've got NVIDIA, 3.59 million out there. Trading 100.5 right now. Their low was 90.69 this morning. They opened at $92, pretty much even. So they have pretty much rallied as well. Their high was 103.40, so they're about $2 below their high right now, but still good for 3.59 million. Let's just go around the horn really quickly as well, because we are in kind of rarefied territory today when we can get to the odd block and some of the other fun out there today. But I'm curious, as we're seeing, this kind of whipsaw action. We've seen this before, so this could be just the same old record playing out again, sell off in the morning, rally in the afternoon. We also have rumors out there now. I think it was Goldman and others coming out saying, "Oh, this definitely has to be, where the Fed has to do an emergency rate cut this week." So that rumor could also be buoying us out there. Mr. Meatball, what do you think is causing this turnaround, sir? Then I know you got to run in a bit, so give us what you're keeping an eye on for the rest of the week until the Thursday shows.
Well, I mean, I just think things, like I said, there was such panic this morning that we've now kind of fallen naturally to where the market was going to be down this morning. The panic, like I said, was more along the lines of volatility and money needed to get out of NVIDIA. I don't know I don't really want to dig into this Japanese carry trade, but the unwinding of that carry trade is what apparently was causing this big push lower. Now the question is, where do we go from here? Like I said, I don't know that the bottom is in. I do think the top is in for volatility. I'd be looking for the VIX to stay, 25 to 35 for the rest of the week. Maybe we get a rip tomorrow and then potentially some more selling. Fed emergency rate cut. Emergency rate cuts are not a good thing, folks. We might get a rally on that, but that is not a good thing. I'm not sure the economy is weak enough. I mean, market sell-off in Japan ratcheting up their own currency, to me, doesn't say we need a rate cut, but, the Fed has done crazier things before. So definitely worth keeping an eye out. We do still have a bunch of earnings floating out, but we're going to be in this kind of malaise until NVIDIA earnings hit in a couple of weeks. Those are the next big ones.
Yeah, you're right. Emergency rate cut, not exactly great stuff out there. And if folks want more option pit goodness in these crazy markets, where should they go? What should they do, sir?
Yeah, I'm putting out great stuff on Twitter right now, so just follow me at Option Pit.
There you go. Follow him at Option Pit. You too can get your degree from Option Pit U, and maybe some sweet swag out there as well. Mr. Uncle Mike, same question for you, sir. I know sometimes it's, trying to divine the whims of madness when you're trying to speculate as to what is driving market activity out there. But in your eyes, sir, as you mentioned, we've been rallying pretty much all session since the open. What do you think is driving? You think it's just this rumors of this emergency rate cut, quote unquote, from the Fed, or you think something else is afoot, sir?
I really don't know at this point. I could be that, but just the thing that just the fact that when we're in the trading block that I'm leading with the VIX tells us that it's kind of a crazy thing, and that's the first thing that I saw or that really caught my eye this morning. So I really don't know at this point. The only thing that I do know is that if I'm hedged, I'm staying hedged. If I'm buying holding, I'm continuing to buy and hold. And if the things I need to get out of Dodge, I want to get out of Dodge.
We're going to get out of Dodge. Actually, before we do that, listeners, let's hit on a couple other things here in the market. I do want to put out, it sounds like a good question for our audience as well. So producers, if you can get that, if not, we'll post it after the show. Should we enact an emergency rate cut? Should the Fed enact an emergency rate cut right now, given the recent market activity? Yay or nay? Let's do a one-day flash poll on that one. Could be kind of fun because, at the end of the day, Our audience, they are the ultimate arbiters. But if you're looking for something a little bit more concrete, dare I say, to sink your teeth into right now, listeners, we do have a little bit of earnings on the docket for this week. We have today Palantir, of course, they're popping off in our movers and shakers out there today, in our top 10 today. So Palantir popping off today. Tomorrow we have Uber and Caterpillar and Rivian, if you're into those, as well as Reddit. Wednesday we got the Diz popping off, as well as CBS, Lyft, Sony, and Robinhood. Robinhood, they're shellacking them today as well. And then Thursday we got Eli Lilly and Paramount. So luckily for you folks, we have some updated earnings move results and season reports for you out here, listeners. Look really quickly. Uber, 6 before the bell, about $59 is where they were trading. They were pricing in $5.18. In the past, they moved $3.99. So Uber pricing in a little bit of extra juice. I guess they got the memo, listeners, that more juice is the way to go out there. Let's keep rolling. Let's go to Palantir. They are today after the bell. They were at 24 3/4 when we ran this report, so obviously that's obviously changed. They were pricing in $3.41. In the past, they moved $4.12, so actually pricing in less juice, which is interesting given how much they've moved already with today's market action out there. So less juice, is that the right trend out there for Palantir, listeners? I'll leave that up to you folks to determine as we keep on rolling out here. Listener, let's go to Reddit and Rivian, the R buddies, both after the bell on the 6th. Let's go to Reddit first. 57.5 is where they were trading. They were pricing in, my goodness, $9.84. Now, in the past, they moved $2.33. Don't read that much into that, though. We obviously don't have much historical data for Reddit as one of the newer entrants to the game. So it looks on this chart, looks like it's jumping off the page. They're pricing in over 4x their recent straddle, or the recent movement, I should say. That's obviously a misleading number there. So 984 could be closer to what it should be out there. Either way, we'll know for certain after the 6th. And Rivian, 14 3/4. They're pricing in about $2. In the past, they moved $1.32. So about 70 cents worth of extra juice on the docket for Rivian. Is that warranted? Given these market actions out here, listeners, I don't know how you could argue that anything is unwarranted or warranted out there as well. Let's go to Lyft, 7th before the bell. Uber and Lyft the same week, always interesting. 10.92 is where they were trading. They didn't get the memo, apparently. They're pricing in $1.46. In the past, they've moved to $1.90. So interesting. Almost $0.50 worth of less juice on the tape for Lyft. Interesting times out there as well, listeners. We have so many we could go to here, listeners. Let's keep rolling. Let's go out to Robinhood, 7th after the bell. 17.88 is where they were trading. They're pricing in $2.36. In the past, they moved to $1.50. So 86 cents worth of extra juice. And again, they have been coming for a hood out there of late. 16 3/4 is where it's trading right now. So again, it's already below $1. I should say more than $1 below where it was when we ran this report earlier this morning. They're off about $1.16 today. Their low was 16 about 3/4 today. Actually, I take it back. They opened at 14.70. They hit 13.98 today. So they popped nearly $3 off their low today. They're actually at their high for the day right now. So yeah, this is a crazy one. If you sold some puts in Robinhood this morning, you were looking pretty good out there. On the season, it's looking pretty good as well. If you're buying vol, 161% is where we're hanging out right now. Listen, it's just historic levels. Week 1, 134%. Week 2, 182%. Week 3, 155%. All that averaging out to 161%. So yeah, right now, buying vol is the name of the game, even though the name of the next segment is the odd block. So let's get to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, it's time for a rare odd block with the uncleest of Mikes. You know, Uncle Mike loves talking himself some unusual activity. Uncle Mike, did you put on your unusual activity pants today, sir?
Oh, shoot. I thought I was supposed to wear the hat, not the pants.
No,
I
it's the
screwed it
pants
up. I'm
day.
sorry.
The hat is for the Thursday show. The pants are for the Monday.
All right.
So
well, you're going to have to get the Thursday version of me for the odd block.
Okay.
I'm sorry.
Okay. Well, while you go change, I will bring up our first name out here, listeners. This, again, shows you what kind of a weird day it is. People are kind of scrambling all over the place. So the paper is actually surprisingly light out there, with the exception of a couple of decent-sized prints. We'll get to one of those in a second. Let's get to some of the weird ones out here today. Again, weird names lighting up our radar today. It's a weird day. It's a weird day across the board, listeners. Let's go out to Citizens Financial Group. I bet you didn't think that one would be on our radar today, yet it is. A ticker symbol CFG, trading 38 1/3, off about 86 cents, or a little over about 2.2% right now. On the year, it's had a year, it was 31.5 a year ago, so it's up 683, 21, almost 22%. Nice run for them. They hit their nadir back in October of last year, as a lot of things did, 22 3/4. So they're up quite a bit from there. They're up almost $16, about $15.5 from their low. Their high came at about $44 back just a few weeks ago as well. So they're, again, glass half full, glass half empty, still up 21, 22% on the year, but obviously off their highs for the year. And what do we have lighting it up out there today, listeners? We have the OC 37.5. So these are in the money. Interesting. So the stock was 37.43. Obviously, it had a low of 36.85 today. It opened at 37.75. So the stock had already dipped a bit from the open when they came in and scooped these calls. Looks like they had a good scoop. If the Rock Lobster was here, he would say they passed his first test, which is the stock has moved in their favor. Looks like they scooped these calls that are now in the money, 80-odd cents in the money, for $3.19, 22,000, I should say, and 30 times when the stock was 37.43. So looks like Mr. Uncle Mike, they're passing the first sniff test, which is they scoop calls, meaty calls, and the stock moved their way aggressively. These are OC 37.5s, so they do have earnings between now and October expiration. The next announcement is on October 16th. So they got themselves some time. And at least so far, Mr. Uncle Mike, in the early blush, our CFG friends seem to be doing well. What are your thoughts?
Yeah, no, not a bad idea. What I like about it is that they're giving themselves some time for the option to move itself. Obviously, we're clueless as to what their overall risk reward would be and their financial picture on it. But if you're bullish on it, what I like about it is that the stock itself, just as of roughly 10 days ago, was at 44. And if we can come back to those levels or get a little bit of a pop, you could argue that like the high 30s is a kind of a means of support for it at this point, like it was back roughly 2 years ago. And if you're looking for a speculative trade, I know absolutely nothing about this stock, but this could be something good.
Don't let him mislead you, listeners. He's always getting on my ear about CFG when the show's not on. He's like, have you bought some CFG? I'm like, no, Uncle Mike, dial back your CFG, love. Not today. It's like that in Bitcoin. You won't shut up about it, listeners. You're going to be sad when you hear the numbers for Bitcoin on our crypto rundown later today, Mr. Uncle Mike. It's going to bring a sad face to Uncle Mike out there. As we keep rolling, let's get out to one of the few large prints we saw out there today. Again, maybe a day for some bottom fishing for some folks out here. Let's see. Let's go out to a newcomer to the program and indeed to the network. This is GOTU Tekadu Inc. I'm sure I butchered that. Ticker symbol GOTU, GOTU. This is a Chinese online education company. You know, if you've been listening, especially to our pro for the last few years on Options Oddities, myself and the Rock Lobster have an interesting history with this sector. In particular, EDU was one we traded quite a bit in the online Chinese education side. A few years ago, it had just incredible volatility, incredible moves. We sold puts in it. They went in our face pretty quickly. Then we ended up trading stock and selling calls around it and selling more puts. And it ended up being a good trade in the long run. But it was a fascinating exploration of what to do when you sell puts in a name that's already cheap and then they still come back to bite you, because this sector, incredibly volatile. China can just put the ban hammer on this sector at any moment, and these stocks move all over the place today. They move all over the place in general off the whims of the Chinese government out there, whether they like it or not. Right now it is 431, up about 31 cents, or about nearly 8% today. On the year, it was trading $3.50 a year ago, so it's up about 77 cents, or about 22% on the year. It had a nice run this year, actually. Kicked off the year right around $3, and then it shot up to about 8 and change in March. Then it hit its high for the year in May of 844. So since then, it's been cut pretty much in half, back to 431. So it's still up 21% on the year, 77 cents, but they are off their highs of nearly $8.50 from a few months ago. And Mr. Uncle Mike, it seems like somebody went bottom fishing out there today, selling 20,000. So not playing around size-wise either. Of the OC4 puts, the stock at the time was 433. So right about where it is right now. So no real change in the stock level. They blasted away on 20,000 of the OC4 puts. They got 56 cents for these, so they were 50 at 70. Not a terribly wide market, all things considered, for this. It's close to 100 vol that they sold, about a 97 vol, and they get earnings between now and October. Obviously, the next announcement for this name is on August 28th. Mr. Uncle Mike, this is a very volatile sector. These puts were in the money just this morning. Stock opened at 370. So they could be wearing these again by the end of the day. That's how volatile this sector is. What do you think about drawing a pretty sizable line in the sand here in your new favorite name, Mr. Uncle Mike, GOTU Tekadu Inc.?
It is a really cool name, GOTU Tekadu. I wasn't expecting to wake up this morning and say GOTU Tekadu. So that's going a new highlight of the show for me. But I really don't like selling juice on stocks that are half the value of what they were a few months ago. It's just, to me, I'm not a fan of it. If I want to be exposed to the stock itself, I would either just buy the stock because I believe that if I'm bullish on it, I believe that a 50-cent move could come any day. But then I have to just kind of sit around and wait till October for that 50-cent move to happen, when I think it could happen much sooner than that if I was bullish, which I know nothing about the stock. But on there, I think that what they're trying to do is take advantage of the generous premium, which is very generous. It's greater than 10% of the value of it if they're getting 50 cents for something that was $4. Well, I guess depending on what time the trade was executed. But so I can see where they're coming from. But if premium's high, it's high for a reason. This would not be in my comfort zone as a premium sale. I would much rather just own the stock.
Well, we definitely discovered in this sector, Uncle Mike, the Rock Lobster and I, that when premium is high, it is high for a reason. I think it was a few years ago, and I was EDU. I think it was trading around $2.50, and they were paying us, I think, 50 odd cents for the 2.5, or maybe even the 2 puts with less than a month ago. So he and I both thought, we know nothing about this name. Let's have some fun. Let's sell some puts. And we learned very quickly that even at that low level, that those puts can be undervalued. And so it became an interesting saga in digging our way out of that hole. It was informative. It was fun for all of us at the end of the day, but it was an eye-opening thing to see how much this online Chinese education sector, how much it can move based on the whims of the Chinese government, Uncle Mike. Spoiler alert a lot. As we keep on rolling. You like those puts, listen? You like those for 56 cents? Are you going to go to a little bit of GOTU out here, OC4 puts, or you like something else? Perhaps you like a name we have talked about in the past, but it's been a little while. This is the Real. Just the name always struck us as funny. We've joked about it a few times. It's kind of an online consignment site, for lack of a better word. They try to term it as luxury goods. But they came under some fire, not too long ago. They were trading $3.16 out there today, off about 15 cents. So they're coming for a little bit. Let's see, on the how low did they get today? 288. So they have rallied a bit from their lows. On the year, a year ago, they're trading 2.25. I think when we were talking about it, they got down to $1.26. That's when I remember talking about it, I believe, on our Options Oddity show on the pro side. We were kind of joking about it then. And then they had a nice run. So the joke was on us, because it went from $1.58 in February all the way up to about $4, $3.90 in March. Then it did hit $4. It got up to $4.64 in May. Since then, the bloom has come off the rose a little bit. It's back down to about $3.16. It's still up about 41%, about 92 cents on the year. So they net have had a good year. What do we spot out there today? Kind of a weird one. Our Eye of Sauron first picked up on a 2,000 lot of the SEP3s going up for 50 cents. We saw these and said, okay, the market is 30 cents at 50. They paid 50 cents 2,000 times. Obviously, somebody thinks this stock's due for another run. Maybe it was oversold this morning. The stock was 294 when they bought these, so they've had a nice little run in the stock already. It's moving their way. Oh, there's earnings tomorrow after the bell for this name as well, so a little bit of earnings paper baked in there as well. Probably accounts for the 50-cent level of premium they paid, which is nothing small. That is a 114 volatility if you are intrigued, listeners. But then we sent the Eye of Sauron back to dig a little more. We found more to this story. These calls actually traded more. They actually started trading. Last print went up at 11:09 almost, at 11:04, so about 4 minutes ahead of time, 4 minutes and change. A 500 lot of these calls traded. The market was 45 cents at 60, so much tighter. And someone whacked out that bid for 45 cents 500 times. So someone blasted away 500 for 45 cents. Then a minute and a half later or so, someone came in and traded 1,500. The market they got then was 50 at 55. So maybe somebody came in 50-cent bid and they were offered at 55 cents with the stock not really moving, only a penny different. So they traded 50 cents there on the bid again. So maybe someone parked a 50-cent bid and bought 1,500 after they took out someone cleared the 45-cent bid. I don't know, weird activity. And then they came back in about 3 minutes later, and the market they got was 30 cents at 50 now, and they traded 50 cents 2,000 more times. So these threes had already traded about 4,000 times by the time we noticed this trade, and the early prints were kind of weird. So maybe Uncle Mike was just taking out that 45-cent bid, and they were really looking to pay 50 cents because they traded 50 cents pretty much the rest of the day. I can go look and see if more of these have traded. But Uncle Mike, some weird paper out here, selling them earlier, then buying them later. What do you think the folks were up to out here in your new favorite name, The Real Real?
The Real Real. You definitely got some good names today. I don't know. Perhaps it's a changed my mind type of trade. And, I didn't really want to do that, but that's a lot of paper for someone to be changing their mind. So this one actually has me scratching my head trying to figure out the concept of what they're trying to do. And a lot of times when I'm on the odd block, I usually have a theory of it, but this time I do not. I don't see what they're trying to do here.
Yeah, I just looked, and they've done only a total of 4,000 on the day. So this is the sum total of the paper. So, yeah, someone cleared out that 45-cent bid for some reason right before they started buying them for 50 cents right after. So yeah, weird stuff. I'm gonna go out on a limb and say they probably bought these, but and even they traded on the bid 1,500 times right before the 50 cents. So I'm gonna go out on a limb and say they cleared it out, and then someone parked the rest for 50 cents. And I don't know how they bought that 45-cent bid. Someone whacked them there before, unless they were their 45-cent bid and someone hit them. Then they said, okay, we'll be 50-cent bid for the rest. That is possible. Then they went up 30 cents at 50, and they traded 50 cents again. So these markets they're disseminating for these are very strange, listeners. But I'm going to go out on a limb and say they probably bought these, and they're looking for another run here in the Real Real going into earnings tomorrow. As we keep on rolling, going into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
Uncle Mike, we're already coming up against it. Wow, we're having fun here today. We've been gassing on with paper out here. You got some strategery in you today, sir?
Yeah, a little bit. So we're going to be doing a webinar on this tomorrow night. So check me out. Follow me on Twitter at Mike Tosaw to get a link to this. I'll just post one after the show as well for the live folks out there. But what we're going to talk about is going to be managing drawdowns while staying invested. And so we couldn't have timed out this topic for a better time than tomorrow night based on the markets right now. We weren't trying to, it just kind of happened that way. And so what we're going to talk about is how if you have buy and hold investments, but you're trying to take income from them, it's a bad idea. Because of the fact that if you're on a monthly scheduled income draw, the market doesn't care. And so what we're going to talk about is how hedged equity can benefit you in such a time. So for example, and the example that we're going to highlight a lot more on the show is, let's say that you retired in 2000 and you had to take in, and you were 100% invested in stocks. Well, between 2000 and 2024, the market's gone up like gangbusters if you look at it from just the beginning to end. However, we've had some problems. We had the lost decade from 2020 to 2010. We had the tech bubble burst. We had the credit crunch of the late 2000s. We had a lot of problems in there. And if you're taking consistent income during those times when the market's down, you're selling at the lows. And that's the opposite of what you want to do throughout time. And we're going to talk about how if you have put options in place, if you have a hedged equity plan, the sequence of return risk can kind of help you through those things. And it's a way with which to manage drawdowns and still collect some income and still be invested in the stock market. So that's what we'll be talking about tomorrow night. We're very excited about it.
Look at you with a well-timed webinar out there. So did you could admit it to me. I'll mute it so the rest of the live folks don't hear. You can admit it to me. Did you cause this sell-off just for your webinar, sir? You can admit it. It's all right.
Sometimes I do stuff.
Your power, Uncle Mike, sometimes you don't know the strength you wield here on this program. Speaking of the strength, our audience, Uncle Mike, they are the ultimate arbiters of all things. We all know this. By the way, I'm looking right now. Great Depression is trending on Twitter, Uncle Mike. So, as usual, social media just running away with everything out there today. I don't feel a Great Depression coming on, Uncle Mike, but nonetheless, it is trending. But we did ask our audience a few minutes ago, Mr. Uncle Mike. Very simple. Should the Fed enact an emergency rate cut? Very simple. Yes or no. A flash poll for today. Mr. Uncle Mike, sir, what is your vote? And then what do you think our audience is voting?
No and no. I don't think our audience wants an emergency rate cut, and I don't think we should have one personally. So I think it's too early to tell. I mean, let's be honest with ourselves. We're still having a heck of a year in the S&P 500. So I think an emergency rate cut would be insanely premature at this point.
I tend to agree. Then you're really talking the Fed put at that point, right? A couple of days of red and the Fed's got to step in. That would really, I think, maybe do some damage to the Fed's reputation over time. Our audience vehemently agrees with you, Mr. Uncle Mike, and with myself. 75% right now. A lot of people voting just in the first few minutes here. This is clearly resonating with folks out there. 75% Uncle Mike say no. 25%, they're the optimistic side. I guess they're the Uncle Mike type. They want all the green on the screen. They say yes. So get out there. This will be a flash poll, but we'll keep it live for the next day, listeners. So if you're listening on the podcast on the on-demand side, which I know most of you are, you'll get a chance to play too. At Options is the place to go. As we go into our final segment, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Let's give you a final rundown here as we are going long, but we're having a fun show here from the, I think if you follow us on Twitter, you can actually see an image of the Hall of Fame studio out here. And looks like, as we talked about, maybe the sell-off was mitigating. Now, not so much, listeners. We're at 50. Did we get up to 50? Looks like we got 52.5 while I was talking here on the show in the S&P. Now coming back down the other way, back below 5,200, 51.96 or so. So back off about 150 handles here in the S. What's 150 handles, Uncle Mike, between friends in the S&P? So closing in on 3%, 2.8% right now in the S&P. NASDAQ off about 3.2%. Dow right now about 2.5%. And the VIX cash hanging out at about 33.5 right now. So not that dissimilar from where we were when we started the show, but VIX a little bit frothier. The market's teetering a little bit more red. Mr. Uncle Mike, sir, obviously Fed talk, a lot of things going on, market levels. What are you keeping an eye on until the next show? And then where should folks go if they want to get your webinar, sir?
Well, definitely keeping an eye on the markets, of course. But the thing that I'm just keeping an eye on right now, in addition to all that, is just bond prices and how they're not moving. And so no one's rushing to say, oh, we're going to get a Fed rate cut, so let's buy before that. No one's buying before that right now. So I'm keeping a close eye on bonds. And then in terms of where to find my webinar, follow me on Twitter at Mike Tosaw, Tosaw. I'll put another link out to it shortly after this show. It's tomorrow night, Tuesday night at 8 p.m. Chicago time.
And Uncle Mike, I'm going to be doing the crypto rundown in a little bit here from the Hall of Fame studio. I know you're going to want in on that show, right? You're probably pretty beaten up about what's been going on in the crypto markets. You're pretty sad, right?
BitcoinReallySucks.com.
I noticed at the top of the show, you didn't include in your things that didn't perform. You didn't include Bitcoin. Gold holding up all right, but Bitcoin not so much out there for the diversification crowd. In the meantime, listeners, you want to check out Uncle Mike's webinar, anything else he's cooking out there, just go to stcharleswealth.com or to his other home, bitcoinreallysucks.com. That's the place to go. Check out the Pit Boys as well, optionpit.com. And you know where to go to kick the tires and light the fires for the folks out there at Public. Public.com is the place to go. We are hearing reports of a lot of brokers out there having problems today with connectivity. People are just hitting them all across the board. You name it, Schwab, IB, you name it. All of them seem to be having some lingering issues out there. So be careful with your brokers out there. If you have crazy orders, maybe you might have to call them up on a day like today. I don't know, but something to bear in mind. On market days like this, listeners, things go a little bit wonky. I say it all the time. I mean it extra special today, listeners. Stay safe out there. I'll be back for an emergency crypto rundown a little bit after this from the Hall of Fame studios. Then you'll have your on-demand content coming at you throughout the rest of the week through Wednesday until I'm back live, maybe in the Chi-Town studio. We shall see for the Thursday episode of the Option Block. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.